So in this video, I'm going to be explaining the one strategy that will completely help you pass your Propfirm account. Okay, you can get out of the drawdown that you've been in, and you can take the strategy, use low risk, and you can completely pass your Propfirm account. And let me show you exactly how the strategy even works. Okay, so you only trade within a London kill zone, which is from 7 a.m. until 11 a.m. on a 5-minute time frame, and then you mark out the highs and the lows of Asian session. Okay, so we're gonna do this right now. So the highs and the lows of Asian session, that's the highest point of Asian session, and this is the lowest point. Okay, if you want this indicator, just comment down below and I'll send it to you completely for free, right? So what we need to do next is very crucial. We need to identify which part of price actually gets liquidated first. Okay, so if it's the highs or the lows. So if I play price forward, you can see it's gone towards upside, downwards to downside, and it's just taking the downside out. Okay, and once it's actually taken this down market out, what we need to do is very simple. So this is our liquidity sweep. Once we do get the liquidity sweep, now we need to look to trade the reversal. Okay, what we need to do now is find a breakage of structure where fractional highs / lows have been completely swept, and we can reinforce our market structure shift with an engulfing candlestick if possible, right? So what we're looking for here now is a market structure shift towards the upside, right? So if I play price forward, you can see that we actually do have a fractional high right here. This is our fractional high. So if this level gets taken out before another fractional high gets made, then this will be the level that we're going to be taking a market structure shift in. So let me tell you exactly why this is actually the level that we're taking. Why this is the fractional high, because the candle before it and the candle after it did not go above this candle right here, which makes this the fractional high. All we need to do next is very simple. Just play price forward, and there we go. It's just completely been swept and no other highs were made. So what we need to do now is mark this as our market structure shift. And once we do have the market structure shift down, the last part is to identify the fair value gap, overlap the fair value gap with a market structure shift for a higher probability, and then we execute the trade. That's all that's left to do. But just before that, if you've been struggling so much with your Propfirm account that you don't even want to trade anymore, you just want to hand it over to someone who's actually trusted in the market and has the best ever service, then you can come straight to me. MSPAS first look at the description, because this is what we'll do. Okay, we'll give you a 20% coupon to buy a Propfirm account, and after you do that, we'll pass the account for you, phase 1 and phase 2. Also, we'll manage the account for 4 months. Yes, you heard that right, 4 months. And once we get a payout every single month, we will take only 30% and you take 70%. You have a full guarantee. If we breach anything, you get a full refund. Make sure you click the first link in the description. You can become like Nicola right here, who's made $3,000, okay, just with us, right? So anyway, now all you need to do is mark out your fair value gap, which will be from here to here. And now what we need to do with the fair value gap is actually enter off of it, right? So we're going to be placing our buy limit right there, placing our stop loss just at the candle wick of the first candle of the FEG, and then we can place our take profit at 1 to 2.5 risk to reward ratio, right? So this is what we're going to be trading today. And now what I need to do is play price forward, and you're going to see exactly how this actually runs up. Right, so what I'm going to be doing, play price forward. You can see how it's entered right there. It's nearly hitting take profit. It's nearly hitting stop loss, sorry, but it didn't, because it's going up, and now it's completely smashed our take profit. This is what we want to see every single day in the markets, and this is what you will be seeing if you start using the strategy. All right, so now we have the next example, and this one is so much more complicated than the one before, so you got to listen very carefully. So we need to mark out the highs like we just did. This is the highs and the lows right here, okay? So it's a very gradual increase of price, right? So what we're going to be looking for now is the reversal, because when the reversal hits, it will hit very heavy. So now what we need to do is pay close attention to where the price will go. So if we play price forward, and there we go, you can see it's just completely swapped the highs. So this will be our liquidity point. Once we've got this liquidity point, all we've got to do now is very simple. So we need to find out a breakage of structure where fractional highs / lows have been swept, and we can reinforce this market structure shift to an engulfing candlestick. So now I'm going to play price forward until price eventually decides to take itself out. There we go. So this is the point that we're looking at right now, and there we go, it's completely gotten swept. So this is the point that we were looking at, and it completely gotten swept by big candles, okay, big engulfing candles. So now what we need to do, this is our market structure shift first of all. So once we got the market structure shift and we got the everything, we need the fair value gap now, okay? We need to identify a fair value gap, overlap this with the market structure shift for a higher probability, and then we can execute the trade, okay? You can see the fair value gap area right here is so clear. It'll be from here to here.
And this is our fair value gap area. So all I'm going to be doing now is placing my sell position right there, placing my stop loss at the first candle of the FEG, and placing my take profit at 1 to 3 risk reward ratio. You might be asking, oh, why do you have specific points where you don't actually put the stop loss all the way at the top, and sometimes you just put it at the highlighted area? Okay, all of that you can learn it in my mentorship. Okay, it's in the second link in the description. Just go check it out. You don't have to buy it, just go check it out and see if it fits for you, because it doesn't really fit for everyone. But anyway, if I play by forward now, I'm gonna see how it actually runs up. So you can see it's going back up. It entered the area just now, so it's entered our price. Now we're looking for it to go all the way down and smash take profit, and there we go. It's completely smash take profit. If you tell me this strategy doesn't work and you're still not using it, I don't know what you're doing, because you'll never become profitable in your life.
Let me show you this strategy on a very, very fundamental level, right? So this is what you're going to be doing. It's very simple. So you're going to be waiting for Asian session to do whatever it wants, right? So you're going to let it do highs, lows, whatever it wants. But once it gets to the specific trading time, which is from 7 a.m. until 11 a.m., this is what we need to do. You need to mark out the highs. You need to mark out the highs, and you need to mark out the lows, right? After you mark out the highs and the lows, you figure out which one of these two got swept, right? So let's say the lows have been swept, or let's say the highs have been swept, because it didn't get swept in this video. So the highs have been swept. Now what you need to do is very simple from here on out. You just need to make sure that you're looking for the this liquidity sweep, sorry. Now what you need to do is make sure you're looking for the market structure shift, okay, which will happen with a fractional low. So what I'm going to be doing now is waiting for a move like this, where it gives me a clear market structure shift, and now I'm going to mark this out. This will be our MSS. And once we do get a market structure shift, from here on out, we know what we need to do next. Okay, it's very simple. We just need to mark out our fair value gap, which will overlap with the market structure shift, and then we can enter a short position at the actual highlighted area and place our stop loss just at the first candle of the FEG, and place our take profit at 1 to 2.5 risk reward ratio. Okay, you can see how it nearly aligns with Asian sessions lows as well at the same time, which is a very good indication that the strategy is going well and you will actually make profits from this trade. Okay, so now you're gonna wait for it to bump, and then it will completely come down and smash your take profit. Okay, so this is how it will happen every single day. Make sure you do rewatch this video if you didn't get it, because this is very, very important for the next part of the video that I'm going to be showing you. And make sure you do tune in for the next video I'm going to be uploading. But anyway, that's going to be the end of it, and I'll see you in the next one. Take care.